is eigenlijk het juiste woord dat Rijke hier hanteert. In mijn eerste gewaarwording dat ik dacht, dat kan niet. Dat mag... Dat...
Excuseer, dames en heren. Dus, je probeert dan terug je toekomst...
Ik begrijp echt niet wat er hier aan het gebeuren is.
Excuseer. Valer, sorry, echt sorry. Excuseer, dames en heren. Bijvoorbeeld, ja, seksualiteit ook een groot probleem, bijvoorbeeld, wordt.
Ja, mijn vriend heeft het gewoon gedaan gemaakt.
Plus het feit, als je met seks omgaat, is het niet alleen het fysieke dat telt, maar ook soms de lieve woordjes. Ja, ik vind dus dat dit echt niet kan hoor. Ik bedoel, meneer, moeten we nu nog antwoorden of niet? Want ja, dan zwijg ik liever.
Een vraag uit het publiek aan de... Ja, meneer, je had een...
Ik heb hetzelfde. Ik ben eigenlijk bij een vrij eenvoudige ingreep ook gekwetst geraakt aan de stembanden. Maar...
Ik vind dus dat dit niet kan horen dat gebeuren is.
Ik vind het vrij ergerlijk, meneer, er gedurende een half uur.
Dit kan voor mij
Uitgelachen te worden vlak in het gezicht van publiek.
Warning. This video and all other videos on this channel for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all.
Oh, goodness me. All right, hello and welcome to Camel Finance. I'm your boy, Camel, and we're still kind of in this process of forming a bottom. Right, the contrarian rant yesterday seemed to be well received, but we got a whole heap of data come out yesterday, as you can see here. We had mixed PMI, okay, we had got ISM manufacturing PMI coming in ever so slightly recessionary, below the 50 threshold that is indicative of contraction or expansion. Below 50, of course, is indicative of economic contraction, and above is indicative of economic expansion. The US S&P manufacturing PMI, though, came in ever so slightly above the 50 threshold. So a mixed bag there. Jolts as well, as you can see, slightly below forecast and prior. ISM prices paid creeping up a little. Manufacturing employment index coming in cold, right? So really quite the mixed bag. And all of this against the backdrop of CPI plummeting, okay? We got that again pop to 1.7-ish, and we were saying at the weekend's deep dive that's probably going to be another lower high. I mean, it already was another lower high, but we're saying it's going to be resolving to a new low as well. And I mean, this is truly, in my opinion, starting to show just how overly restrictive current policy is. Okay, this is a product of having rates too high. And of course, so is some of this. Meanwhile, when we go over to the rates, you can see right here, steadfast in being overly restrictive. Okay, and that's going to continue until such time as the 10-year yield can sell off. As it stands right now, though, I do think we have got not only a tell that to the bond market setup and a 10-year yield looking to move lower. But if I get rid of these scribbles here and draw some fresh ones, I'm not a big fan of this, but this is undoubtedly a head and shoulders getting ready to break. And of course, the target would be somewhere in the neighborhood of sub 3.5% with a measured move from top to bottom. So shouldn't be too long before we can get to see some rate cuts put on the table. And at the moment we do start to see that repricing, I do expect to see the market start to put in what I believe will be the final push to the upside. As I was showing in yesterday's episode, there's some complexity in the current setup. In fact, let's run through and recap what I was showing yesterday. I was showing that for the S&P 500, we had wicked a failed cycle but closed above, and then as of yesterday's close, we closed slightly higher. The Nasdaq, as I was showing yesterday, was way more failed looking than the S&P was, but so far, okay, looking like it's refusing to give a true exit the market signal. Meanwhile, the Dow I was showing yesterday is put in a higher low. Extremely bullish setup, and this is breakout retest resumption of this downward sloping red right here. Okay, so far. So resumption isn't complete and confirmed until we close a new higher high, but It's got the making of it, according to me at least. So there's a lot of complexity in the system, but as OV Crypto shows, it's even more complex than I was showing you, because the S&P candles chart has got a daily cycle failure. That's this one here, right? Cycle low, we did indeed pierce that level. But the S&P line chart, daily cycle low, was not failed on a closing basis. As you can see here, that's what the line denotes, closes only. Higher low, pretty bullish. But when we go over to the futures chart, even on a wicking basis with the candles, okay, still a higher low. This to me is a nice subtle tell from the market that the market is trying to bottom here. The bulls are really trying to defend the current levels, and if that can be the case, then hopefully what we can see is a resumption of upside. Again, though, we are still facing this whole overly restrictive policy, and something I see a lot is people trying to blame tariffs, people trying to blame DT for deliberately crashing the markets to force the debt to be refinanced. And that all sounds cool, right? It sounds like you're smart, sounds like you know something. But the reality is, it's always the simple stuff that works. All we have to do is look back in history and see how they handled the debt prior times before. And it's as simple as this, okay? We mark gold up to 20k plus an ounce, and then we use it to balance the books. There is no debt problem because all of the gold can just be marked up and revalued way, way, way higher. To say that that's speculative is wrong. To say that that's more speculative than all of these other ideas about Trump crashing the markets and looking for some kind of, debt refinancing system and, we don't want to refinance the debt at these higher rates. It's all total BS. And we know that just by looking back at history. It's the same cycle that happens over and over and over again, okay? Step one, we start with a currency backed by something. For example, the Great British Pound, okay? That used to once be backed by a pound of silver. So we start with a fiat currency backed by something. Eventually they then take the backing away. That's step two. And then inflation comes in. The currency eventually becomes worth nothing. And then normally they go to the next step, which is to have a war, okay? Have a rising power, take the world reserve currency spot. And we start all again, this time with a new world reserve that again is backed by something, whether it's gold or oil or whatever it is. And so why should we then say this time is going to be different? I think it's going to be ever so slightly different in the sense that rather than lose the world reserve status as the dollar to something like China, I'm sure China would love that, but the US is not going to allow it. And instead what the US is going to do is just reboot the system, okay, with a revaluation of gold and this time a digital component. That's what the whole CBDCs thing is. Again, it's not speculative. They're literally doing it right before our eyes. All you have to do is go and do some research. Go and look around you. You can see this stuff pretty clear. So I don't think we need any of these conspiracy theories. I think we're just going to say with certainty, humans never learn, okay? They make the same mistakes over and over again. This pony show is going to go round once more. And the only difference this time around is we're not going to go to a new currency. China's not going to take the #1 spot. And instead, we're just going to have some gold-backed system that is linked to a digital CBDC or a basket SDR. Who cares, right? It doesn't really matter what the details are. But all of these ideas that Trump is tanking the markets because he doesn't want to refinance the debt. There is no debt. That's the thing people don't understand, okay? The debt sounds out of control. But when you turn gold from 3k an ounce to 20 or even 40k an ounce, okay, and then revalue what's currently in the vaults, which is currently priced at about $35 an ounce to 40k an ounce, suddenly, boom, there is no more debt anymore. Okay, so I think people just need to do a bit more research and spend a bit less time parroting the stuff they see on Twitter. I also have no idea how I've got here. I'm just scratching my head now. I go off on these tangents and sometimes I just catch myself waffling. But anyway, that should fill up the time for this morning whilst you have your coffee. The last couple of things I wanted to point at is everyone seems to be expecting an apocalypse, but no one's actually positioned that way. And when I saw this, I really, really resonated with this because I can see this in my comments. People for weeks now have been saying, Camel, the top's in, how come you can't see you're in a bear market? And when I say things like, okay, call the top and short it then, they're like, oh, no, bro, I'm with you. Like, I think there's another high. I'm like, why are you talking bearish then, right? Like, your opinion doesn't mean anything. Your position is what counts, okay? It's that old saying in trading, which is don't tell me what you think, show me what you hold. And if you're not short right now, then who are you to be bear posting, doom posting, calling the top, okay? It doesn't make sense. If you think the top is in, you better be short. Otherwise, you don't get an opinion, right? And if you're holding Bitcoin or holding stocks, like this chart says, okay, this red line here shows that people are long stocks. And this right here says they think that the end is here and we're all going to crash and the top's already in. Well, if that's how you're positioned, what are you doing? Do you just not respect capital at all? You just want to lose money, right? If you're bearish, sell. If you're bearish, go short. If you have no idea what you're doing, step out of the market. But this to me is, again, fitting in with that theme of sentiment being extreme down here, okay? People are just losing their minds. And they're completely frozen solid. They can't act on their bearishness. I also found this, somebody tagged me in this, so thank you for sharing this with me. I thought this was really interesting. Bitcoin is more or less quite correlated to gold, at least with regards to the broader market moves. And there's one thing that's interesting here. When the correlation coefficient surpasses 0.5, forms a top and then goes back down towards that level and touches it, it's always proven to be a really good time to buy or DCA into Bitcoin. It does somewhat depend where we are in the market, but as per the chart below, price has done this 4 out of 6 times, where it went parabolic almost immediately after, while the other 2 out of 6 times, it was still a relatively good place to enter the market as expansion took place afterwards, only it took a little more time. So let's zoom in here and take a good look. Notice how what happens is we cross up, okay, we roll over, and then we cross back below the black, okay, and that is synonymous with Bitcoin going parabolic in black as gold rolls over. The next time we do this, okay, you'll see we break above here where my cursor is, we roll over, we cross back below the magic black line, and what happens to Bitcoin is it trades sideways before entering a big push. The next time this happens here, we break above the black, we roll over, cross back below it, and it's synonymous with Bitcoin again, taking a at least short to medium term push. Then of course we've got that C19 decline. The next time we saw this, we crossed above the black, we rolled over, okay, crossed back below it, and this was synonymous with Bitcoin doing extremely Bitcoin things. Again, we saw this black above black, okay, roll over, cross back below, and it was synonymous with Bitcoin doing, approximately speaking, a double. At the same time, no less, as gold was putting in a short-term correction. And then we saw it again here, okay? Notice again, we cross back above where my cursor is, roll back below it, and this again sees Bitcoin go from about 25, 27K all the way up to 73K. Once again, we cross back above, we roll over, okay, we cross back below, and this time it is synonymous with Bitcoin going from approximately 60K to about 108. And then once more, and this is at the hard right edge now, we cross above the black, we roll over as we are right at this very moment in time, crossing back below, and we are therefore expecting to see Bitcoin at the least top around sideways before creeping its way up, and in the best case scenario, start to go immediately vertical here. And I do wonder if gold is going to run into a weekly cycle high. In fact, I say I wonder, I know it's going to run into a weekly cycle high probably halfway through the next daily cycle. We're due a daily cycle low any day now, and then the members and I are going to start to hunt for a weekly cycle high. So should probably see gold come off, should probably see Bitcoin take a nice upside push here. Very nice chart here from Malleus. And the Weatherman is now leaning bullish at the moment. This is for 3 reasons. Number 1, the price is retesting a multi-year parabola. Nobody seems to notice or care about it. Here we go, okay? Touch, retest, looking to push off. Number 2, the weekly and daily CMA buy signals have both confirmed an EXA cross in negative territory. See that here? Buy signal, and again, buy signal. And number 3, the price action is very similar to the last time the Bank of Japan unexpectedly raised rates. It started by blowing up the JPY carry trades in a sprint for liquidity, followed up with money printer go burr. And we can see that here on the third and final chart. Notice how we get a choppy multi-month range. Bank of Japan raises interest rates here. We get a puke. We touch the support, then come in for a retest of the parabola, and off we go. What have we got today? Choppy multi-month range again. Bank of Japan raises interest rates, puke down to hit the parabola, secondary retest. Now going to look for a repeat of this to come in here, hopefully. Tells me at least to keep an open mind about higher prices walking forward. So we kind of already touched on the stock market, right? So far working on a bottom. Bottoms, of course, are a process. We know our invalidation levels because we do them every day to death on this channel. So what else is there to say other than going to be looking for gold to start that decline into a daily cycle low any day now? Probably a 2, 3, 4 day decline should do it. And then, as I was saying a minute ago, we're going to start to look for a weekly cycle peak and hunt for a weekly cycle. Now, notice here, textbook, okay, 1 right trans, 2 right trans. This is clearly going to be right trans by the time it finds the low, and therefore we expect cycle 4 to left trans and fail into a weekly cycle. And of course, if we don't get it in cycle 4, then 1, 2, 3, 4, and we'll look for it in cycle 5 like this, and therefore hunt the weekly cycle low back here. Either way, doesn't make much of a difference. And of course, we're going to continue to add to our positions, such as the silver and the miners, out of that weekly cycle low, because that is the strategy for now. I see a lot of people trying to call tops here, and some kind of correction is probably on the table. But believe me, no one's as bullish as I am on gold, and I am not going to be one of these people that says, oh, that's it, the top's in. This is going to be a multi-year bull market. And yes, some shakeouts into weekly cycle lows along the way are due. We've got this here for the level 3 members to capture, which is November-ish 2026. This is where we get the half cycle low in the major 8-year cycle. So we're expecting like a 4-year cycle low sometime around here, and that will be a mandatory load up the truck buy opportunity. But realistically, we are still positioned for and expecting something like this to occur, okay, and then another 4 or so years of upside thereafter. Remember, everyone's target on gold is too low, since this is the solution to the debt, as I was talking about earlier. Bitcoin as well, gotta love this, right? Gotta love the relative strength right now. One thing we should watch out for is that rising wedge I was talking about, something like this. So far, this is potentially breakdown, retest, resumption. So we do have to watch for that, okay? Can't rule that out yet. But as I was saying yesterday, I think this would be pretty funny to see this turn out to be a fake breakdown and then a lockout rally. I think that's where max pain is, but we'll find out about that at some point in the near future. Does look like the tide is beginning to turn to me. Does look like momentum is beginning to swing back the other way. So, well, that's it from me. I've got a busy day running errands today. Still going to be waiting for the market to sort itself out. I'm going to be doing myself a favor and touching grass, getting outside of the house. I'm not going to be sat here watching the intraday price movements as ever. We only really care about the closes. Before I go away, actually, I almost forgot. If you have got the camelfinance.co.uk membership, we added a whole heap of trendline strategy stuff in here for you to go through and have a look at. So I know for a long time people were asking me to write another one of those PDFs that I did for the cycle trading on trend lines, and we've just stuck it in here so you get even more value. If you haven't tried this out, you can try it for free for 2 weeks. There's absolutely zero risk to that. So you could even try it, okay? Read through this and then cancel if you want to. But for those of you that were for a long time saying, can I write a PDF about the trend lines? Well, we've put it here, okay? So again, feel free to go and check that out. And if you're already a member of camelfinance.co.uk, you can find this in the cycle trading guidebook on the left. So other than that, see you tomorrow. Have a great day. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game.